Welcome to the Deep Dive, where we sift through the latest insights to help you get well-informed fast.
Great to be here.
If you've been feeling like the ground beneath your feet is shifting, maybe global economics, or even just how you pay for your coffee, you're definitely not alone.
Yeah, things are changing incredibly fast.
Exactly. And it makes you wonder, what does all this mean for something as basic as how money moves?
It's a huge question, definitely. And that's precisely what we're diving into today.
Uh,
Our mission, really, is to understand how leaders in the payments industry are navigating this, well, incredibly turbulent financial landscape.
Right.
We've pulled insights from 9 top payments executives. They shared their perspectives with PYM NTS for their What's Next in Payments series, Trade-Offs.
Okay, 9 execs. So what's the goal?
We're going to try and uncover their new North Star, see how they're fundamentally transforming their operations to cope with all this change.
Okay, let's unpack this right away because it sounds like there's a really profound shift happening.
There is.
The core takeaway, loud and clear from these sources, is that the old goal, operational stability, certainty, that might actually be over for these companies.
It's a huge departure, yeah.
So the new guiding principle isn't certainty, it's capability. Is that right?
Exactly. Building capability means accelerating transformation, managing risk better, cutting spend but getting more value,
Okay.
and scaling faster, but crucially, without sacrificing resilience.
Wow, that sounds like a pretty tall order.
It absolutely is, and they need to tackle it quickly. It requires a fundamental rethink, really.
So not just small tweaks.
No, they're talking about deliberate architecture-level reinvention. Think like redesigning the whole operating system of the business.
Gotcha.
And from their talks, 4 key themes sort of emerged as foundational for adapting. Strategic innovation amid economic uncertainty.
Okay.
Leveling up traditional business models with embedded finance. Prioritizing liquidity, cash flow, and working capital optimization. And finally, AI and data-driven personalization, but seen as infrastructure.
Infrastructure, interesting.
Yeah, and these aren't just, buzzwords. They're like integrated pillars for a new way of operating when everything's constantly changing.
All right, let's kick off with that first one then. Strategic innovation amid economic uncertainty. It seems pretty clear all 9 companies are feeling the heat, right? Inflation, geopolitical stuff.
Oh, absolutely. That macroeconomic turbulence was mentioned by everyone. Inflation, instability, interest rate hikes, those ongoing supply chain issues.
Yeah, still.
Apparently so. And these factors are definitely reshaping priorities, making companies think differently.
So what's surprising is that instead of hitting the brakes, they're actually innovating more.
That's the striking part. They're doubling down on purposeful, risk-aware innovation, not just innovation for its own sake.
Purposeful and risk-aware. Okay.
Yeah, exactly. Like Marcin Głogowski from Marqeta put it. He's their SVP and MD in Europe.
Right, the card issuing platform.
Yeah. He said, all businesses exist all the time in environments that produce some form of risks. The underlying principle for businesses remains adaptation.
Adaptation. So it's not just survival, it's like continuous evolution.
Precisely. Staying ahead. It's a shift to thoughtful acceleration over retreat.
Thoughtful acceleration. I like that. So practical investment.
Yeah, in digital foundations. Things like cloud computing, AI, Nilesh Dussain from AWS.
Amazon's cloud division.
Right. He made a strong point. Innovation is not a luxury, it's a lifeline. He added that legacy infrastructure simply can't keep up. And the traditional model.
Yeah.
Those cycles are now too long and too costly.
So if you're stuck on old tech, you're basically falling behind fast.
That's the picture, yeah. And it raises the question of what kind of innovation.
Right, not just shiny objects.
Exactly. Practicality over theory. Ernest Rolfson, CEO of Finexio, the B2B payments company.
Okay.
He said it simply, digitized payments are intended to keep operations moving, even when markets aren't.
So practical stuff that keeps the lights on, even when things get shaky.
That's the idea. Business continuity through innovation.
Okay, that makes sense. Innovation as a lifeline. But in this rush, how do they avoid, breaking things? How do they balance innovation with stability?
That's the crucial balancing act. It came up a lot.
I bet.
Jared Rutkowski, who heads payables and receivables at FIS.
Big fintech player.
Right. He told PYM NTS, customers want innovation, but they need reliability more.
Okay, that's key. Reliability first.
Absolutely. What good or fancy features if the system isn't trustworthy, right? Or it breaks?
Yeah, totally undermines trust. So build a strong foundation while innovating.
That's the tightrope they're walking.
Okay, great point. And this practical innovation, it seems like it's not just about improving existing services, but it's changing who offers them. Which brings us to the second theme, embedded finance.
Yes, this was a huge theme, a dominant theme, they called it.
Not just a feature, but a fundamental shift in delivering value.
Exactly. What's really interesting is how companies not traditionally in financial services themselves.
Like retailers, logistics firms.
Yeah, exactly. Big platforms, property managers too. They're seeing the value of bringing financial context right into their customer relationships. Marquez Glogowski highlighted this.
So these non-finance companies are becoming quasi-banks.
That's the term the report used, yeah. Quasi-banks.
It's kind of mind-bending. So for me as a user, what does that look like?
Well, imagine, like instead of going to a bank for a loan for a big purchase, you get an instant credit offer right there from the brand you're buying from. Or your ride-sharing app offers you its own branded account and card for instant payouts after you drive.
Right. I've seen things like that starting to pop up.
Yeah. It lets these non-financial brands offer these experiences, builds engagement, opens up new revenue. It's about putting finance where the customer already is.
Makes it frictionless. Redefines loyalty, maybe.
Could do, yeah. It really pushes past the old model. Drew Edwards, the CEO of Ingo Payments.
Push payments, right?
Yeah. He said, we've moved past that world where we all pick a bank, we go stand in line, we open a relationship, and we use their money mobility.
Huh. So the bank isn't the only starting point anymore.
Not necessarily. He did admit embedding finance can be daunting for companies,
I can imagine.
but the potential payoff and loyalty and margin, it's huge. It changes the whole game of where and how you get financial services. Makes them almost invisible, ideally.
Invisible finance, okay. And that changes when and how money moves too, which feels like a good transition to the third theme, liquidity, cash flow, working capital.
Yes, absolutely connected. In this uncertain climate, resilience is everything.
Right.
So executives kept bringing up managing liquidity, optimizing cash flow, using specific tools and automation to do it.
Tools like?
Things like managing the trade-offs between day sales, outstanding DSO, how fast you get paid,
Okay.
and days payable, outstanding DPO, how long you take to pay your suppliers.
Managing those timings.
Exactly. Optimizing those, using automation in AP and AR, accounts payable and receivable. That's critical now for stable cash flow.
And it sounds like getting this wrong is a major pain point.
Huge. Mariana Lamson, the CFO at Boost Payment Solutions, they focus on B2B payments.
Right.
She highlighted this. Many companies in the middle market struggle with unpaid invoices. Sometimes as much as 30% go unresolved monthly.
30%. Wow. That's not just inefficient.
She calls it a business continuity risk. And you can see why. 30% unpaid, that could sink a business.
Easily. Yeah, that really drives home what continuity risk means.
It really does. And it shows how the CFO role is shifting too.
How so?
They're intensely focused now on converting sales into cash as quickly and securely as possible. It's not just budgets anymore.
It's about speed and security of cash.
Yeah, investing in digital ways to speed up cash conversion, cut friction, get real-time visibility into where the money is. Critical capabilities.
So does this mean something like accounts payable, which maybe used to be seen as just back office paperwork, is now actually strategic?
That's exactly it. Big reevaluation. Finexio's Ernest Rolson confirmed this. He said AP is now a frontline lever for liquidity and resilience.
A frontline lever. Interesting.
Yeah. He added it helps provide stability in the back office around visibility and predictability of your cash flow.
So managing how you pay others gives you control over your own cash.
Powerful control, yeah. Makes the business healthier.
Makes total sense. Cash flow is lifeblood. And increasingly, the intelligence behind all this, the optimization, the innovation, it seems to come from the fourth theme, AI and data.
Spot on. AI and data-driven personalization viewed as essential infrastructure.
Infrastructure, not just hype.
Exactly. The sources emphasize it's seen as embedded, outcome-driven infrastructure.
Yeah.
Practical, intelligent systems for scalable, resilient platforms.
So like electricity, it's just there powering things.
Good analogy. It's becoming foundational. Brian Caldarelli, the Chief Administrative Officer at Valera, he really drove home the non-negotiable areas. Client experience, non-negotiable. Fraud protection, non-negotiable. Cybersecurity, non-negotiable.
Okay, the absolute must-haves.
And AI is becoming essential to deliver on those securely and effectively. You just can't do it at scale without it anymore.
So AI isn't just adding fancy features, it's like keeping the plumbing working and secure.
Pretty much. And what's interesting is how using AI smartly becomes part of risk management itself.
Instead of adding risk.
Right. Jeff Brady at Bank of America, he's head of global trade and supply chain finance.
Okay.
He noted, you can't innovate your way out of uncertainty. Makes sense.
Right.
But if you're smart about how you incorporate innovation into your risk framework, it becomes part of your process.
How so? Examples?
You mentioned things like credit analysis, AI modeling, core areas where AI plugs directly into the control processes, making them stronger, more predictive.
Using AI to see risk coming.
Exactly. Proactive understanding and management. And for the customer, this means better security, making sure money keeps flowing smoothly.
Yeah, that's crucial.
David Darovi from I2C, the payment processor, he put it really well. Prediction is the new protection. We're using AI to get ahead of fraud, to spot vulnerabilities before they become breaches.
Prediction is the new protection. I like that. So it's offensive, not just defensive.
Much more proactive, yeah. More reassuring. And it ties back to what Boost's Mariana Lamson said.
What was that?
The best innovations don't necessarily disrupt. They enhance. They build on existing processes and add value.
So AI as infrastructure enhances the whole system smarter, safer, more efficient.
That's the goal, benefiting businesses and customers.
Okay, so let's connect all these dots then. Strategic innovation, embedded finance, optimizing cash flow, AI as infrastructure.
Yeah.
It all points back to that new North Star you mentioned. It's not about finding certainty anymore.
No, it's about building robust, adaptable capability.
And for you listening, this means the whole payments world is getting way more agile, more integrated.
Exactly. The strategy isn't just reacting to change. It's about actively architecting it, building it into the infrastructure.
Architecting change.
Yeah. The winners will be the ones building it,
Yeah.
making sure their platforms are cloud-first, AI-ready, built tough for whatever comes next.
Well, they're not just responding to the future, they're building it.
That's the idea.
Well, that feels like a good place to wrap up this deep dive.
Yeah, a lot covered.
It really is. The world of payments is undergoing this profound transformation, moving away from seeking stability towards building capability.
With those pillars, purposeful innovation, embedded finance, cash flow focus, and AI infrastructure.
A powerful vision.
It really is. And it leaves us with a final thought, maybe something provocative for you to consider.
Okay, let's hear it.
Well, given this quick shift, non-financial companies becoming quasi-banks, AI becoming prediction as protection, how might the actual definition of a financial institution change in the next, say, 5 years? For you personally, or the businesses you deal with?
Is that line between tech company and financial service provider just blurring completely?
And what does that mean for things like trust, convenience, your everyday financial life?
Definitely something to ponder as you navigate your own financial world. Thank you for joining us on the deep dive.
Thanks, Erwin.
We'll catch you next time.